All right. I don't know if we're live or not. Are you able to? I can't see the comments. Is that the problem? All right. Well, let me go to YouTube as well. All right. What's up, guys? We're just going to wait a minute before we get started so that a few people can move in before we get going. Also, I've done about 5 of these now and have yet to understand how to get past any of the technical difficulties that I run into every single time we do one. Yeah, that's right. So in 4 more, we'll have the the methodology down here. Okay. Oh, they say they can't hear you, Mark. Hmm. That yeah, let me try and fix that. Yeah, I need to do a Sorry guys, need 1 second. Okay. I think that should do the trick there.
Okay. Uh, I'll let folks in the chat if you can let us know if you can
Yeah,
hear me.
are you guys able to hear Mark or
I think the live stream is also a little bit. Uh, I'll let folks in the chat if you can let.
Yeah, I think they can hear you now.
Okay, excellent.
All right, cool. Well, I think we could get started. There's a few people here.
Yeah, let's go for it.
All right. So what's up, guys? Welcome back to DCA. This is Mark from Upside Down Data, and we're just going to talk about the markets today. We're just going to go over, whatever you guys want to talk about. We'll talk a little bit about, obviously, the recent crash that's occurred and kind of where we think we're at now, where we may be going. So with that said, let's go ahead and do it.
Yeah, let's do it. So I think there are different places that we could start. Although I think one of the places that maybe is a reasonable place to start is kind of what a lot of people are talking about is catalyzing this crash, which is the whole situation around Luna, Terra UST, and that debacle that happened. So I'm curious your thoughts, Jay, on that whole issue. What you think some of the consequences of that are likely to be beyond just seeing, Luna and UST go to zero effectively.
Yeah. So, you know, obviously, I think whenever something like this happens, you sort of have a situation where you have loss in confidence just in the market in general from a lot of people who were already sort of borderline individuals. And I think, you know, anytime something like we obviously had a stable coin basically just crash and then its associated protocol completely wipe out. So, I mean, we just wiped off what I don't recall exactly what the maximum market cap of Terra Luna was, but
I think it was around 40 billion across UST and Luna.
right. So, $40 billion disappearing essentially overnight is the kind of thing that's just it's a golden ticket invitation for regulators to come in. And ultimately, that's sort of what I'm concerned about primarily, based, with the events that just occurred. Um, you had a ton of people just get wiped out, absolutely wiped out. And I think, it's like raw meat sitting around for a dog. And, you know, I think that's ultimately what's going to happen. I think regulators are going to use that event to sort of step in and, come after the markets. And, in a lot of ways, it might be justified because $40 billion shouldn't just get wiped out overnight. And, nonetheless, that's what we saw. So, to whoever did this, whoever, in my opinion, and, we could talk about this more, but in my opinion, this was orchestrated. And whoever did it, I hope that they're not, actively involved in the crypto market because, their greed, they're going, I don't know, maybe they made so much money after this event that it won't really matter. But I think they did harm to the crypto market in this, series of events. So what about you, Mark?
Yeah, well, I think those are great points. I have a couple thoughts about this whole thing. So I do think the regulation issue is an important one to consider, and I think the way that I kind of see it is that it can kind of go different ways. So I think a lot of people's reaction in the crypto space generally in terms of regulators is just immediate distrust, and I think there's justifiable reasons for that. There's been a lot
Right.
of bad faith efforts by different regulators who really seem to be more motivated about just keeping the traditional finance system intact, and they don't want to see crypto supplanting any of it. But I do think that there would be a possibility that if we actually had good faith regulation, there might actually be some good that comes from it, and
Right.
especially in the context of stablecoins, because it is the case that stablecoins kind of do serve as the backbone of crypto right now. And it was kind of fortunate for us to some degree that UST was not more widely adopted than it already was. It had a huge market cap, but the vast majority of UST was just locked up in Anchor protocol. So it was kind of largely self-contained from that perspective. But you can imagine if Tether were to blow up, given how it's integral to basically every single layer one chain out there and basically every single DeFi platform that you can imagine, it would be obviously it's more difficult to depeg Tether, assuming they actually have one, at least close to one-to-one backing of their, of the assets in actual, cash equivalents. But it's the type of thing where it's a massive systemic risk to the crypto markets. So if there were to be regulations that would ensure, for example, one-to-one backing in these supposed to be collateralized projects and things like that, that might actually not be a terrible thing, because it might just mean that you can't get these kind of shady companies, which Tether has a reputation of this. It's debated oftentimes how much backing they actually have. They're not very transparent. It kind of seems, with how critical they are for the market, would be, in my opinion, kind of nice to at least know that they can back up what they're saying, because certainly if something like that were to collapse, it would be UST collapsing times many
Right.
multiples worse. It would be a thing that would be exponentially harder for crypto to recover from, in my opinion, if something like that were to blow up. So I don't know how regulators are going to use this. Obviously, I think concerns that they're going to just use this as a bad faith excuse to come in and go overboard with other things. I think that's an argument that people can make for sure. But if we were to get good faith regulation, who knows? Crypto might actually come out fine. And if it could actually boost confidence in the space, especially amongst institutions, maybe more would be willing to deploy capital into some of those spaces. Because I do know that already there's a lot of trepidation for some institutions to deploy too much capital into stable coins for these exact reasons, that they're not confident enough in their solvency or in their stability. So just some thoughts. I think folks will have, there's going to be a lot of discussion about this for sure. But I just wanted to put that out as kind of maybe an unpopular perspective in the crypto space, that regulation, if it's done well, in my opinion, actually could potentially have a positive impact. I don't think it guaranteed is going to be a negative, but certainly that could happen. I'm curious if you have similar thoughts, or if you're much more skeptical of regulators in this
No,
context.
no, I'm not. I'm someone who kind of thinks that ultimately regulation is going to be required for, the asset class as a whole to make that next step into a place where institutions are actually moving into the market. Because while they are moving in right now, it's to a limited degree. And I think we'll continue to see that it's going to be limited movement in until there's clarity. Because at the end of the day, institutions care about compliance. They want to be compliant with, whatever potential regulations, are existing or may come about. And they're not going to be willing to sort of, get heavily invested in an asset class where the operating grounds that they're, playing in right now could be different 6 months from now. And then they have all the costs associated with, reallocating assets, et cetera. And, I think there are other concerns still with, as far as institutions go with things like, you know, lack of knowledge of how to store the assets, how to keep their assets safe, et cetera. So things like UST, events like that, I also don't think, make a strong case for institutional type investors to come into the market if, an event like that can occur and it's sort of out of their control. So there's this massive degree of risk that extends into literally every segment of the crypto market that, you could have the entire market sort of operating in some sort of safe and secure manner. But if UST depegs and it tanks the entire market, well, they have absolutely no, no control over that. And I think that's sort of it's a unique situation that I'm sure there are corollaries within the equities market, but those things are so tightly regulated that, you just don't expect something like that to happen. I guess the closest correlation would be something like the subprime mortgage crisis,
Right.
where there's all this inherent risk building behind the scenes that you can't really see, and then it just sort of all unravels all at once.
Yeah, exactly. I've seen people on crypto Twitter calling it the Lehman Brothers moment for
Right.
crypto.
Right.
This big failure of what equivalent of a massive financial institution in the space. And that's the other thing that I think is notable about this event is that it does kind of change things in my outlook to some degree, where up until this point, my view of what was driving crypto down and why we were kind of, having this very precipitous, bear market, frankly, out of November, was that it was the macro conditions. It was inflation, it was the Fed, going towards QT, them raising interest rates, and that wasn't necessarily anything inherent to crypto that was causing us to go down. The fundamentals of crypto had been largely the same, and it was just broader market conditions bring us down. But now suddenly with this, we have a big moment where this is something that's very much internal to crypto failing. Obviously, it was possible probably because we've been in a bear market for so long and because the macro picture was so negative that we didn't just have all this money freely flowing into the space that could have propped up Luna for who knows how much longer. But it makes me then more skeptical that we could have some kind of just V-shaped recovery off of this for multiple reasons. I think
Right.
we don't yet know what the contagion effects of this are. I had said that we were lucky that UST wasn't more widely adopted, but it was still relatively widely adopted, especially in different DeFi protocols. A lot of DeFi protocols had this as collateral in their systems, had kind of built around UST. So those are going to be affected. We don't really know in terms of the really big players in the space how much exposure they had and how much devastation this would be. And then, like you were mentioning, Jay, that's just the hit to confidence that a lot of people might be more hesitant to get back into crypto. And even people who got affected who would want to get back in might just not have the capital anymore, frankly, to do it because of how much of a bloodbath it was. I mean, there were a lot of stories going around about people who just lost literally everything, or who had put their life savings effectively into Anchor. And so there are a lot of people who just literally couldn't redeploy to the space even if they wanted to right now. So I keep seeing on crypto Twitter these people posting these charts about a V-shaped recovery and then going off to the moon in the next 6 months. And I just think that's incredible. I mean, obviously I wouldn't complain if that happens, but I just see that as being incredibly unrealistic from here, just because of these, frankly, long-lasting effects that are going to happen from this, not even to mention the macro picture. I think even if the macro picture was better, we might still have a little bit more time we'd have to spend down in the kind of the abyss just to be able to let it fade into memory more, regain some of that confidence. Obviously, that's my take. I think other people have different takes. Some people probably don't see the Terra situation as being that detrimental to the broader market. But personally, with just that volume of value loss and how many retail investors got affected, it seems hard to me to believe that sentiment and confidence will return immediately.
Right. Yeah, I completely agree there. pretty much on all fronts. And you know, Juan in the chat says, "Can you guys basically give your worst and best case scenarios for the space?" And Juan, I'm assuming you're referring to sort of in the more medium, short to medium term. And again, when I say short term, we're talking about months, not
Right.
not you know,
Not days.
yeah, I don't care what's going to happen tomorrow, and none of us know at the end of the day.
Right.
But
Yeah. Exactly.
you know, I guess let's go ahead and do that. What do you think for the months to, you know, maybe year or so? What do you
Right.
see playing
Yeah.
out in the market?
Oh boy. I mean, the thing that's so tough about this.
Best and worst case.
Yeah. I mean, well, I guess it depends how broad I want to paint it, but I think the thing that I'm thinking about is it's still very much contextualized or dependent on what happens in the broader markets. And if we're going to see a recession and a full-on 2008 style crash in the stock market, like that's what I see as being the worst case scenario over that time period, then we don't actually, I don't think we actually really have much of a historical way of quantifying how badly Bitcoin would get hit in that kind of environment, because it's never seen that before.
Right.
So frankly, like the worst case scenario, like I don't know, it could be, who knows how far Bitcoin could fall in that type of environment. Not to say it would have to stay down there forever, but I think people who assume that the 200-week moving average or the 300-week moving average are like the definitive floors that we can't fall behind, in my opinion, that's not at all safe. I think going back down to the single digit thousands could be possible, if not lower, in some kind of absolute meltdown like that, where everyone's just pulling liquidity out of any kind of risk asset they can see.
Right.
So I know that's not a very helpful answer in the sense that it's all based on some other factors that we would have to predict, like how likely is a full-on stock market blow up. But just over that time period, I think if I'm just giving the full range, that's the absolute kind of bottom. But then to flip it around on the top, then it's also different, where we could see some kind of massive rally in the stock market if everything kind of goes the right way, if inflation peaks, if the Fed quickly reverses course, if more liquidity is able to enter right back into the market, and if there's not as much fallout from the Terra situation as I was talking about before, getting us melt up in the stock market, it's not impossible in that kind of situation. If that happens, the beta between the S&P 500 and Bitcoin is pretty massive. So you get a 10-20% rally in S&P 500, you're seeing Bitcoin going up by, easily hitting 100K potentially at that, in those kind of, especially within a short amount of time. And so that's where I think with these best and worst case scenarios, it's just hard to really give ones that are too definitive, because it's all, in my opinion, it's also contextual of what happens with these other factors. But Jay, maybe you have more concrete ideas of what you think the best and worst case scenarios are.
Yeah. I mean, to be honest, I think the worst case scenario is exactly like you just described. And I think it's the thing that no one talks about. It's if we were to see a 2000 type crash, all bets are off, guys. And I mean, no one wants to hear it, but at the end of the day, I think I've said it enough times that it's not going to be shocking probably to most people watching the channel right now. I think that I mean, just think about the concurrent events that have played out over the last 2 years. This, I think we're sitting in the, one of the most high risk period, or at least there's the potential for things to unravel right now, more so than probably any time that I can remember. You just have so many events going on right now that I just consider this to be an extremely risky period, just as an investor in general. So like Mark said, all you have to do, if you don't believe that things like this can happen, go back and look at the 2000 stock crash. And if that were, if events played out like that again, and if you look historically, events, crashes like that tend to occur, maybe not to that magnitude, but we see mega market corrections once every 20 to 30 years or so. And it's been 22 years now since that played out. So it's not like, not that necessarily something like that has to happen every, X amount of years. But just statistically speaking, when you're talking about like an economy, and, a buildup, of events that occur that sort of give you a perfect storm type scenario. I don't know that we're necessarily in that now, but when you talk about the fact that we have record inflation, when we have, we just had COVID, global lockdowns, all of the supply chain issues, and that's another thing that people need to appreciate. The Fed can raise interest rates, and that's one side of an inflationary type environment, but they can't fix manufacturing lockdown or, shutdowns in China. They can't make increase the number of products that are available to buy, which is another massive portion of the, supply chain or of inflationary pressure. So when you have, diminishing supply in the face of, diminished, decreased number of dollars floating around, which is what's going to happen as the Fed continues these measures, you just, I don't know. It's all stuff that I say over and over and over again, so I don't think people want to hear it anymore. But ultimately, I think if things went south, or if a black swan event happened out in the economy, imagine a black swan event happening out there in the world again right now, that could send markets absolutely tanking. And, if a lot of these energy issues do start to affect Europe in a more concrete way, the European economy could enter into a recessionary period, and that's going to have blowback in Asia and, North America. And ultimately, these things, we live in a global economy now, and, if something happens to, one of the major organs of the world's economy, it's going to have an effect on everything else as well. So I think people are really not considering that as a possibility. Now, as far as an upside goes, I just look back to July to show you, the market can turn around on a dime, and, we've seen the, NASDAQ's been recovering a little bit these last few days. And these rallies can go on for, multiple months at a time. So it wouldn't be the most wild thing that I've ever seen in my life for the market to go back up to, 50K or more, 60K even potentially, like we saw in November, a new all-time high in the setting of a, limited market strength, because there weren't nearly as many market participants and that sort of thing. And yet we still saw a new all-time high. Now, whether or not that was a manufactured all-time high is a different debate, but the market, if you're seeing the stock market do well, even temporarily, you could see crypto, go on quite a run. And so that's kind of what I think, both ends of the spectrum. It's kind of long-winded, but he did say fan fiction, so that's what he got.
Yeah, no, I think that makes sense. I mean, one thing I was thinking about when you were talking, I very much agree with you, is the flip side of all of this too, is that, being on this side of some massive, financial meltdown like that is obviously very scary. But it's also the case that the people who are able to come out of that with capital ready to deploy,
Yeah.
and are able to do it, in an intelligent way, even if it's just averaging in down towards the bottom, those are the people then that for the next 10 years are just making outsized returns. The people in the 2008 financial crisis who were able to buy up all the cheap stocks back there. And then, especially if people got into Bitcoin early, that's a little bit different. But just, there's a lot of opportunity that presents itself in those kind of conditions. And it's just not being washed out so that you can't indulge in it in a sense. Because the market never goes in one direction forever. And even if you get a chopping market for a number of years, like if you go back and look at the stock market over the inflationary period in the 70s, for example, it's largely flat, but then with these protracted rallies that happen for years, volatility. And so even within those periods, there's opportunities to be had. It's just a matter of not being washed out early so that you're able to actually take part. And so I feel like that's another thing that's just useful to talk about, is that obviously these things are bleak and a lot of people lose a lot of money, and that's terrible. But it's also the case that a lot of people then set themselves up for massive returns over the coming decade or so. So just the flip of that coin, I think.
Yeah. I mean, I in a recent video I showed Amazon, in the 2000 crash, a lot of things never got back to their prior all-time high. It took 10 years in many cases. But at the same time, if you were someone who was progressively, dynamically buying as the price went down and down, Amazon was down 94%, followed by, over the next 20 years, a 64,000% run. So, you know, if you're someone who's that, and that's why we've been warning, whoops, sorry. That's why we've been warning that you don't want to be heavy, or you don't want to be FOMOing into altcoins as as Bitcoin is sitting below its 20-week moving average. It's better to sort of slowly get into them, because there's a lot of downside risk in the market, and that's not, you know, as we're going farther and farther into a bear market, even if you're down 90%. So if, an asset used to be $100 and now it's $10, well, if it goes down $5 more, that's only 5% more from the top, but you're down 50% still from right here. So all you have to do is look back to 2018 to see that play out, as the market goes on, and it all depends on your time horizon. And ultimately, something I think we both talked about, you guys talked about this first, was looking to fundamentals in the setting of a bear market, buying projects with strong fundamentals, because things like, we've talked about this, Bitcoin, Ethereum, Chainlink, things like that, they subjectively, with Bitcoin and Ethereum, I think they have strong fundamentals, and almost objectively, in my opinion, something like Chainlink, the fundamentals are very strong. It basically is allowing the entire DeFi space to operate. So buying assets like that in a bear market, you're almost, you're setting yourself up for the future, because things with fundamentals almost assuredly come back to new all-time highs. Things that are speculative, then you're accepting way more risk, potentially much higher reward as well. But you're certainly taking on more risk by buying things right now that are simply speculative in nature. So,
yeah, definitely. And yeah, I think that's a very prudent thing to be thinking about right now, because there's certainly a lot of falling knives right now. And the temptation with altcoins always is that in these, bear market rallies they will pump harder than Bitcoin, just because that's how it works. They're
right.
lower market cap assets. But then the next time we get another downturn and another leg further down to the bear market, they'll end up going down to even lower price than likely where you entered. And so if you're not making the exits, you're not going to enjoy any of that. And I think trying to time those things is very difficult, and most people are just going to get wrecked. You're going to buy and hold too long and then end up being underwater again. And so I think, especially with altcoins, it's one of those things where the floor is so low that it's really hard to know how far it's going to go. And because their fate is really kind of being determined by factors not unto themselves, they're being determined by what Bitcoin and then broader markets are doing. It just becomes very risky to be playing with them, in my opinion, until there might be some reason to believe that we're going back into a more bullish stance that will be protracted. And that's, of course, the big game that we're all playing, is trying to figure out when we're actually able to find that change in sentiment. But personally, until I see some of, different trend models that, that we look at, until I start seeing some of those get a little bit more optimistic about some of these assets, I personally am just treating it as noise, anything that happens until that happens. That's just me, of course, but that's just, with altcoins being so risky, I don't really care if I miss the absolute bottom, frankly, because
right.
the gains that you can make even after the bottom is so largely in altcoins that
Right.
I'd rather be more confident that we're in a next bull run rather than just trying to catch the absolute bottom. But
Do you have any altcoins that you would say, in terms of, to circle back to that fundamental question versus, speculation, do you have any altcoins that you might consider have pretty strong fundamentals, other than, the obvious, like things like, I don't know if you consider Ethereum to have fundamentals. I consider just the fact that it has such a strong user base in and of itself to, sort of be a representation of fundamentals. But is there anything else besides Bitcoin, Ethereum, that you sort of look to as, being something like that? And obviously there's a lot of subjectivity to that question, but
Right, for sure. Yeah, I mean, I think like, I won't go into Chainlink because you mentioned that, and I do agree. I think that one's a very strong project on the fundamental side. I mean, another one that I think is starting to develop its fundamentals. It's still pretty young, so it's maybe still a little bit more speculative, but Polkadot and the fact that it's getting its entire ecosystem up and running, it seems like, it could have a very bright future ahead of it. And I do expect it to survive. It's a large enough project with enough development going on with it that even if it does take a massive hit in a protracted bear market, I don't think it's going to just completely die. But it's doing all the things that people are talking about blockchains needing to start to do now, with the interoperability being
Right.
built in into it, with the chains being able to build on top, being very quick, cheap to use. It basically just has all the hallmarks of what you want with the interoperability built in, and it doesn't have the baggage or the challenge that something like Cosmos and Atom has, where Cosmos also has an interoperable, ecosystem. And I think, frankly, the Cosmos ecosystem will probably be able to bounce back after Terra. It'll take a hit in the short term for sure, but I think it will eventually bounce back. The problem is that, Atom itself doesn't have a ton of utility right now. Atom maxis will disagree with me on that, but I think a lot of people see it as not being as fundamentally strong of an asset right now, just because it has limited use cases. So that's where I see, in the comparison, Polkadot maybe having a bit of an advantage, because I see Dot as having more fundamental use case as an asset, and that it should accrue value as its ecosystem accrues value, maybe to a larger degree. But that's just one of my first thoughts. I'm curious, Jay, what other assets you're watching for those reasons.
Yeah, so there's kind of two. And one's, one, I think it's not very sexy, so you don't hear it talked about a lot. And a lot of people may contend to the contrary here, because it's highly centralized. But the Binance Smart Chain, I think just the ecosystem that they're building, and, I don't heavily invest in Binance, quite frankly. I have some, I have some Binance token, but it's mostly just for, trading fees. So that's definitely one, and they're doing a lot of things with, sort of, I don't know, they're almost the king of shitcoins at the end of the day, because they have, so many, of these more scammy type networks built on the Binance Smart Chain. But I think they are doing some things right now that are interesting, and I kind of will leave it at that, since it's sort of out of the scope of explaining exactly what I'm talking about, but just some of the ways that they're developing their ecosystem. And then they're centralized, so that brings in to question, how important is that? And I would contend it's probably not that important, considering Binance, BNB is constantly one of the, top tokens, and BUSD's up there as well. So apparently, centralization isn't, at the end of the day, that important. But another would be Solana. Although they still, they have a lot of things to work out as well. But I do think there are a lot of things to like about the Solana network, in terms of its, speed, transactions per second, which I know is debatable, because a lot of the ways they show the TPS is, it's sort of skewed, because small transactions like voting, that can go, you can do how many ever transactions per second there. But when you want to process smart contracts, that's a whole new can of worms, and then that number is significantly lower. But nonetheless, I think the fundamentals of that network and sort of the adoption of that network is fairly strong. The thing with Solana, I question, and this is something I don't hear a lot of people talking about, but as I get more and more into sort of analyzing that network, is the fees on the Solana network are so low that, well, I could buy one Solana and have enough Solana to pay fees for an entire year's worth of transactions almost. So, it sort of draws into question the supply and demand of the token. Sure, maybe there's speculation driving the price up, but what happens when we're in segments of the market? And, at the end of the day, we're not investing in this stuff just to capture its speculative price, because that, that's not going to lead to a healthy market. It's not going to lead to adoption if the only reason that anyone cares about any of these networks is capturing its speculative price. Because if that's the case, we don't need any of this stuff, and I think it eventually goes away. But if we care about the networks and we're actually using this stuff for the technology, and I know that's a meme at this point. I mean, it's quite literally a meme. I'm here for the technology.
Yeah.
So I just have to question, when you have such cheap transactions, and it's almost the same thing with Polkadot. It's something I really like. I really like the technology of Polkadot, but it all comes down to the demand structure of the token. And is it actually being a good network and being a good investment aren't always the same thing. And that's another thing that I think a lot of people lose sight of. So, there's other things we could talk about, like other uses for the token just beyond paying transaction fees, like staking, etc. But, that's definitely something I think we need to start considering is where's the demand coming from for the token. With the video I did for Chainlink, I broke down exactly where that demand is going to come from. It's going to come from it's going to be multifaceted, and it's a clear path to price appreciation. Whereas with some other things, I'm not exactly sure where that appreciation in the price is going to come from. It doesn't mean it won't, but it just means that at this moment in time, I'm not necessarily, convinced. But we'll have to see how some things in that sense end up playing out.
Yeah, for sure. And actually, I just want to jump off of what you're saying about Solana, because I have a few things I've been thinking about with Solana recently. I think your point about the low transaction fees is a very important one for a couple of reasons. One of the reasons why I think it's really important, my understanding is the way that Solana works is that they don't have, so the way like with Ethereum, for example, gas is essentially a market where the more congested the network gets, the more gas that you have to pay to be able to use the network. And the advantage of one of those systems is that it prevents people from spamming the network, from just putting in just millions of meaningless transactions to bog it down, because you'd have to be paying an outrageous amount of money to try to do that. And that's really why Solana has had all these issues with it having to get shut down in different times, is when it gets to points where something really intense is happening, like an NFT mint where a bunch of bots are all dumping in trying to mint these NFTs, and it's very cheap transaction fees for them to do it, so they can afford to just spam millions of transactions a second. Solana can't actually handle that. It's not, even though it can't handle a lot of transactions per second, it can't handle that volume. And that's something they're going to have to figure out, because you can't have a blockchain that's constantly going down for extended periods of time, many of hours, for multiple reasons. No enterprise is going to want to build on that chain if they can't rely on it being operational all the time. It also really screws up DeFi, where if something happens where the network has to go down for 8 hours, if prices, if other assets fall below people's liquidation levels, you can have DeFi projects that now suddenly have under collateralized assets, and they actually have bad debt. They can't liquidate once they restart, liquidate people's collateral to the same price they would need to actually get back to what people had borrowed against it. And so there's a lot of issues that come up, and that's one of the things that people who are against the critics of Solana, that's one of the things they talk about a lot. And I think that's something, frankly, they're gonna have to deal with. And I think there is merit to those criticisms. But then going back to what you were saying about with fundamentals, the one other thing I wanted to say, and I don't necessarily have a particular project in this category, it's more a general space that I'm watching, and then projects that I think seem strong are ones that I'm interested in the future, are really ones that are trying to take crypto and apply it to some real world issue, ones that aren't just insular to crypto. Because in some ways, that's one of potential weaknesses you could identify with even a bunch of layer ones, even Polkadot, frankly, is that
I can see the VeChain people typing on their computers at home right now.
Yeah, right. I don't know if VeChain's the one, but it is the case that really, like, the value that comes from a system like Polkadot is assuming that there's inherent value in crypto, which I think people here are going to agree that that's the case, but not everyone's going to see it that way. And so I think the projects that are going to actually be able to leverage crypto to disrupt other things in kind of more real world applications, whichever ones do that right, I think could actually have a ton of upside in them and could end up really appreciating. I just think we're so early, it's hard to know exactly what those use cases will be and which projects will be successful, because it's very well the case that the first mover might not be the one that actually succeeds. Like in the decentralized file storage space, for example, who knows if Filecoin or storage or any of those is actually going to be the
Right.
one. But there is an argument to be made that if someone can figure that out in a useful way, that could be a huge market. That decentralized, I mean, people have argued that it could help enterprises avoid cyber attacks in a way, or the ransomware type of attacks, where if it's impossible to actually decrypt your file system because it is distributed, there's no way to actually go and access all the different points.
Right.
Those kind of attacks aren't really as possible. So there's a lot of disruption that's possible here. We're still very early, but that's just a general space that I'm watching, is just those ones that are trying to make that jump into non-crypto applications. I think in the next 10 years, there are going to be some real gems that come around at around this time. Again, I could 100% be wrong about that, but that's just my thinking on that domain.
Yeah, I mean, it all comes down to, whether a lot of this stuff needs to be tokenized or not. I think that's one consideration. And then, if it's not, then how do you incentivize sort of a decentralization of the network? So, I think there's a lot of questions with numerous, aspects of the market, or of developing markets, let's say, within the crypto space itself. So I think that's a really good point. So let's see. Does anyone else have any?
Yeah,
so someone says, "What about Matic?" I guess
that's an interesting one. Do you have thoughts?
I kind of have a few thoughts about it. I think it's another one where, well, we know that the foundation, they're selling the token to sort of fund a lot of their operations, and in my opinion, that's if you. Matic is one of these networks that's out here acquiring other technologies. It's not free to go out and make an actual acquisition. So they need to get money. Chainlink does the same thing. They sort of expand the supply with the Chainlink token to get, to raise funds. And how do you think they hire employees? How do you think they hire, do this research they're doing, et cetera? It's with money from the token. So with Matic, I think there's, it's one of these ones that the price has been driven up, in a spectacular way because of, speculators, and it's going to naturally take a price hit. And that's kind of what we're seeing now. It doesn't diminish the value of the network. And, quite frankly, it has a lot of, it has developing competition as well. So,
right. Yeah. And I think that the thing that I think about with all the layer twos on, Ethereum is just, I think there will always be a market for them. But the thing I'm curious about is once, a lot of the upgrades from Ethereum eventually happen, they keep pushing them out. But essentially once, they introduce sharding onto Ethereum and try to actually make Ethereum more efficient as a network and increase its throughput, how much demand there's going to continue to be for layer one solutions. I think there probably will. I think even with sharding on Ethereum, it's just going to be so massive that fees are still going to be more expensive on the network itself versus taking them off to a layer one, or excuse me, a layer two and then back. But that is just one of the kind of extra wrinkles with something like Matic versus alternative L1, is that Matic is a little bit dependent on what's going on with Ethereum to some degree of what its fundamental value is. Whereas with a competing L1, it's really its ability to compete with Ethereum is kind of, and other L1s that are out there. So it's just different kind of points of competition. I think with to be bullish L2, you kind of have to be very bullish Ethereum also.
Are you bullish on Ethereum out of curiosity?
I mean, at this point, just given its kind of massive adoption base beyond everything else, especially if they're able to actually pull through with the upgrades and they're effective, I think it could continue to be a big player. I don't know if it'll maintain its market share. I think that's very unlikely, especially in DeFi. We can already see it shrinking. It's still the massive player, but it's shrinking. But I don't think that Ethereum's going to go anywhere, frankly. I think the only way that Ethereum would get outdone is if they're just so slow to ever upgrade anything on the network that eventually other competitors just beat them on technology. If they're, competitors can do the decentralization, but then everything else also, or to a better degree, then maybe you start seeing that. Because really, retail investors can't use Ethereum for DeFi. It's just they're priced out. It doesn't work. So it's all the big money players who can use it. But if they can start making themselves available to retail investors by some of these upgrades and making the throughput of the network exponentially higher, then I see no reason for it not to be able to continue going, because it is still the case that a lot of innovation in DeFi happens on Ethereum.
Yeah.
And so I don't know. That's my perspective. Are you bullish long term Ethereum?
So I actually hate Ethereum, but it's my second largest investment, and I remain bullish on it. So I think I think the whole cost structure of it is bad for the space, but nonetheless, it's probably still the best smart contract platform that's out there for numerous reasons: users, decentralization, etc. But I think that it just goes to show that first mover advantage. You don't necessarily have to be the best, and maybe it is. Maybe in certain ways it is the best network. Um, but quite frankly, you don't have to be the best. If you're there first, you just have a huge advantage, and we see that every day on crypto YouTube. So
Right. Yeah. Exactly.
so
There's yeah. And also just like the early days of the internet, you saw
right,
that
yeah.
biggest names completely failing, and then the actual winners emerging a lot later.
Well, yeah, exactly. But they can still stick around for quite a while, and ultimately we'll have to see what happens with the upgrades, because when I say I don't like Ethereum, I'm talking about as it exists. Whatever today is, the 13th or whatever, May 2022.
Right. Right.
I don't know. Ask me, in January of 2023 or May of 2023. Maybe I'm singing a different story. But, just because I don't like something doesn't mean I don't appreciate its potential as an investment. It's why I don't just put my money somewhere, in a frivolous manner. I'm putting my money in Ethereum because I believe in, sort of others' beliefs in it. And
Right. Yeah.
if they believe in it, they're going to invest in it, and therefore I will as well, because they're using
Right.
it. People use it, and at the end of the day, that's all that matters. Who's using your network? Are people using it? And people use Ethereum, and that's what matters. So
Right. Yeah. Well, actually, just a slight tangent, but what you were just saying reminds me. I think you bring up a really excellent point. It's just something I think it's useful to talk about in terms of investment mindset, and not to say this is that what I'm about to say. People should make their own decisions, but I see so many people in the crypto space becoming kind of maximalists on a certain asset, to the point where I feel like it sometimes clouds people's judgment or blinds them to
right,
any risks that is inherent to their network. I mean, I'm not trying to punch down by saying this, but I think this happened with Luna to a lot of people, where they just got so blindly bullish on Luna,
right,
they totally put on their blinders to any suggestion that there were risks involved in the network, and obviously that did not end well. And so really, with this kind of tribalism we see in crypto, I kind of feel like it is expensive in a way to be a maximalist, someone who's just on the X team and then just attacks everyone from any other team, or attacks anyone who says something negative about your project. Because ultimately, I think what we're all here for is to make money at the end of the day. And if being that blindly bullish on a certain asset is going to end up costing you money in the long run, that doesn't seem like a very effective way of doing it. And so that is one thing that I wish didn't happen so much, is that I feel like crypto almost encourage tribalism to some degree, where you get these strong leaders of projects who then people kind of build a cult of personality around, and then become very defensive and don't like to hear anything negative about their project. So just something that, the psychology of that, interests me. And I do think that in some ways it's an expensive way of navigating the space, but that's just my take on that.
yeah, I definitely agree. I think a lot of people, you know, at the end of the day, these projects don't care about you. So, you can like a project, you can really think that, it's doing a lot of great things, and you can believe in its mission. But at the end of the day, it's just an investment, and you shouldn't. I think having an emotional attachment to something, you've already lost. It may work out for you. It may end up working out for you, and oftentimes it may. But once you've become emotionally attached, you're no longer objective, and you're not investing anymore. You're essentially gambling, because you won't be able to see the writing on the wall when things get ugly, or when a better competitor comes around, when better technology is out there. And I think that's something that, especially in the crypto space, we have a lot of retail investors, a lot of new investors, and this is their first time, this is their first time around the block, and they sort of haven't learned that lesson yet. And it can be an expensive lesson to learn depending on, how much money, or, how much of your accrued assets you have. Juan says Sergey openly hates us, talking about Sergey from Chainlink. So, well, I'm actually I'm gonna have to call it there because I have somewhere to be. So
Sounds good.
so
But yeah, this is a great discussion. I think we covered a lot of territory. Hopefully this was interesting to folks.
yeah, definitely. Well, thanks everyone for watching tonight. I'm sorry I didn't get to everyone's questions, but I'll go through after, and I'll type something up, or I'll do a video. I see a lot of people asking about Cardano, so it's probably about time for our channels to do a Cardano video, perhaps. So
Right. Yeah.
so all right, guys. Well, thanks for watching, and we'll talk to you guys later.